Sure. I mean, what we've been seeing so far, and we've been talking about it today and overnight, the 16 billion response, is the tit for tat. So as we come into September, September the 5th, we get the release of the 200 billion that's going to be put on by the US, as we know, and we're going to get the 65 billion response. That 200 billion will probably come into effect probably before the end of September. With the 65 billion response from China, obviously, there's a very real risk that Trump's going to go ahead with the next 200 billion that he's been talking about, and so we keep escalating. Why will Trump go ahead? Well, in the polls at the moment, they're improving. Yes, there's been a swing against the Republicans, which Ohio showed this week, but he's still improving on his personal rating. So he thinks it's playing well, and he thinks he's found the golden nectar to get his party reinvigorated, or at least his supporters reinvigorated. So he's pushing hard, and there doesn't seem to be any sort of momentum within the White House. So outside, let's call it the policy hawks, to back down on this. They think it's working. Okay. And then when we look at China, she is also finding that he's getting a lot of flack for not having cut this off or not addressed it as well. And the local media is talking about it a fair bit, and he's getting a bit of criticism. So what I read is that he's feeling like he has to dig in and show some leadership. So there's a very real chance that this continues to escalate. The market really believes it's just brinkmanship and it will calm down and that there'll be a win for Trump ahead of the midterms. That could still happen. I know the Chinese would love to try and take advantage of that little window.
But Brett, let me jump in here. That's what the market thinks. What do you think, though? Because, increasingly there's this sense that, look, maybe the president's not bluffing, right? Maybe he intends to take this all the way, especially if, look, throwing tariffs at China, if it works, it gets his poll numbers out. Why stop there? Why not go the whole hog and try and change the entire structure of how they do their economy, do business, and interact with the world?
Yeah, I think that's a very real risk. When we're talking brinkmanship, it's a very hard thing to position for in the markets because we have a bimodal outcome. As soon as Trump turns around and says, I've reached an agreement with the Chinese and declares a win, we're going to have a massive risk-on rally and a reversal of the movement we've seen in CNH to date. So it's very tricky to trade this, but I think it can be done quite effectively in the option market. So going through that scenario that I just painted for you, we're actually selling volatility on CNH, the currency, through this month, and then we're long volatility for September and October as we go into the midterms. Because if there is a failure here of reaching an agreement, I think CNH will sail through 7, and it'll probably go to about 7.2 as the tensions escalate. But so of course, if we get a resolution, you want to have something going the other way, and for that, I'm actually using option markets to position for US rates to start to rise, because I believe US rates would be pushing a lot higher right now if it wasn't for the trade tensions that are going on. So in a two-horse race, if I can get 3 or 4 to 1 on each side, we've got a good book.
Okay.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.